In this presentation, we will discuss assets as they relate to healthcare organizations. Assets limited as to use. Not-for-profit healthcare organizations need to identify assets limited as to use. So recall, we're thinking about not-for-profit healthcare organizations, not the governmental type of organizations, healthcare organizations. Not-for-profit healthcare organizations need to identify assets that are limited to use. Assets limited to as to use are those without donor restrictions. So they don't have the donor restrictions note, whose use is limited by the governing board or contracts or agreements with parties other than the donors. So notice what we're talking here with the not-for-profit organizations. The assets that are limited to use are those without donor restrictions. So this isn't a restriction, meaning the restriction's not coming here from the donor, so we're not reporting it as a donor restriction. Whose use is limited, so there's still a limit to the asset, but it's a limit by the governing board or contracts or agreements with parties other than the donor. So we're not talking about a donor restriction on the limiting factor here, but some other type of limiting factor. GASB, so when we think about the governmental type of entities as opposed to the not-for-profit non-governmental, standards do not use the same category. So we don't have the same categorization with regards to GASB as we do with the not-for-profits. That categorization limit for the assets limited as to use. However, GASB do require reporting of assets restricted by external parties. So the restrictions by external parties do need to be reported. These includes restrictions by donors or contracts and other agreements. Investments. So now we're going to talk about the asset of investments, typically considering stocks and bonds types of investments. Whenever we think about investments, what should come to your mind is that what are we going to put the investment on the books at? If we purchased it, not a problem. We'll put it on the books at whatever we purchased it at because that was the market price. However, if there's a donation, do we put it on the books at the donated price, or do we put it on the books at the donor's basis or cost, or do we put it on at the fair market value? And it's typically going to be the fair value. The second question we have is, well, what happens when there's a change in value? So we know that the stocks, if there's traded on an exchange especially, we know what the price is at a given time because stocks are trading at that price, and therefore we could adjust our stock prices to what is being traded. Should we do that? And if we do that, then what are we going to do with the resulting credit or debit, the gain or loss that will be recorded? Where are we going to report that? So those are kind of the questions we have with the investments. You'll recall that's going to be different than, of course, property that would be property, plant, and equipment, like a building, where we typically put it on at cost and we don't try to appraise it all the time and change to the fair value most of the time, because that would be very difficult to do, as opposed to with something like stocks, which is trading all the time and would be easier to do to make that adjustment for. So first we're going to start off with the not-for-profit organizations, which would be the non-governmental, not-for-profit. Investments in equity securities are reported at fair value. So we're going to put it on the books at the fair value. Purchase of debt securities are reported at acquisition price. And obviously, if the acquisition happened in the market, you would think that would be basically the market price and the fair value at the point of purchase. And then both realized and unrealized gains and losses are reported as change in net assets. And you'll recall that net assets is basically like the equity section of the not-for-profit organization. Therefore, the report is reported as the changes in net assets. So that means that we're going to be adjusting then to the fair value periodically. We'll make the adjustment to the fair value and will result in a unrealized gain or loss, and then that's going to be reported as a changes in net assets. Now, obviously, if something is realized, then you would think that we would make a sale in a similar fashion as we would if we sold like equipment or something like that, because we realized the gain or loss. When it's unrealized, that's usually when the question happens, because when it's unrealized, we didn't actually make a sale, but we are thinking that we're going to adjust the asset to its current value, and then therefore have to recognize an unrealized gain or loss somewhere, and here it's going to be reported as changes in net assets. What about the governmental entities? Same kind of question. Changes in fair value of certain investments are reported in the statement of revenue, expenses, and changes in net assets. So once again, we're going to have to adjust the investments to the fair value for certain investments. Will result in an unrealized gain or loss. That then is going to be reported in the statement of revenues, expenses, and changes in net position, which is in essence the income statement type of statement. How about for-profit type of organizations? Investments in equity securities are reported at fair value, and then the debt investments are separated into trading, available for sale, and held to maturity. These three categorizations are something we see in for-profit type of accounting, and whether or not they are in each of these categories, that will make the distinction and the differentiation as to how we're going to be reporting them. If you want more information on these categorizations, that's going to be, you could take a look in more depth at accounting for-profit types of entities for more information there. We're going to be spending most of our time concentrating on the not-for-profit and the governmental. Receivables, commitments, and contingencies. Several assets and contra-asset accounts result from amounts due from patients and insurance companies. So in other words, most of the receivables type of items that we're going to be having are due to amounts that are going to be due from patients, and of course, if we're healthcare organizations, insurance companies. So that could include accounts receivable. We have the allowance for uncollectible accounts because like with a for-profit type of organization, we will have to be adjusting and making estimates for how much of the receivables we think are going to be uncollectible, interim payments, and settlement amounts. Contingencies can happen due to malpractice claims, cost contracting, third-party payer payment programs, obligations to provide uncompensated care, contractual agreements with physicians. Now we'll discuss FASB operating statements. So remember, when we're thinking about FASB, we're thinking about the items that are non-governmental as opposed to GASB for the governmental. Operating statements are going to be those types of statements that are similar to the income statement because they're talking about operations. How have we done over time? We're typically thinking of revenue type of and expense type of accounts, the performance type of accounts, the temporary type of accounts. Not-for-profit healthcare entities call the operating statement the statement of operations. So note, if you want to think about the income statement, of course, when you're thinking about not-for-profit and you're thinking about for-profit and governmental, you might want to just call the type of statement that's a performance type statement an operating statement. And we note that, of course, then we can have the actual name will differ depending on the type of organization. Therefore, the operating statement here is going to be called the statement of operations. Governmental healthcare entities use the name statement of revenues, expenses, and changes in net position. So it's a bit more descriptive because basically it tells you what's in there, revenues, expenses, and the change in net position. The major change, of course, being what would be similar to the net income type of number. So similar statement, we're looking at the performance type of statements between the two. The reporting requirements for the operating statements are similar. Now we're going to discuss the FASB performance indicator. So we're back to the not-for-profit type of organizations, performance indicators. Not-for-profit healthcare organizations should have a performance indicator to report the results of operations. So note, it's a not-for-profit organization. We want to measure basically performance then. How are we doing? And obviously the income statement itself, or what would be similar to the income statement, the operating statement, would be the kind of thing that you would think would be the item that would measure performance. So we want to have those performance indicators. This is important. You would think this would be obvious, but it's not as obvious in a not-for-profit organization because the objective is not necessarily a profit objective. And therefore, if you contrast that to a for-profit type of organization, obviously the performance indicator is basically the net income number. How are we doing? Revenue is the objective, and therefore we're looking to see how much revenue we have generated. In a not-for-profit organization, revenue isn't necessarily the objective, and therefore we need to think about how we're going to be looking at the operating statement with regards to performance indicators to see how we're doing, how efficient are we activating. The performance indicator will provide an operating measure that is similar to income for operations. So income for operations in a for-profit type of organization is basically we're thinking about, what are those income and expense type of items that are core to the operations. And then oftentimes you'll note in like a multiple step income statement will break out those items that aren't core to the operations in the bottom part of the income statement or something like that, which may include things like interest and other types of gains and losses that we don't feel are part of the standard types of operations, although they contribute to the bottom line of the net income. We want a similar type of information for performance indicators with relation to the healthcare type of organization so that we can measure performance, how they're doing over time. Amounts included in a performance indicator are unrestricted revenues, gains, and other support, expenses, and other income. Performance indicators may include excess revenue over expenses, which of course would be similar to a net income type of number, revenue and gains over expenses and losses. So now we're just basically including the gains and the revenue and gains over the expenses and the losses. Earned income and performance earnings. Amounts reported separately from performance indicators. Now, in other words, what's not going to be included basically in the performance indicator type of number, what's going to be reported separately outside of basically that bottom line number that's going to be helping us to indicate the performance, how efficient the operations have been. Receipt of donor restricted contributions, investment returns restricted by donors or by law, transactions with owners, contributions of long-lived assets, equity transfers involving other related entities, unrealized gains and losses on investments other than trading debt securities, and other items that are required to be reported separately. Now we will consider the GASB operating statement. So this is going to be for the governmental type of entities. The operating statements, once again, being similar to the income statement in a for-profit organization, the performance statements. Requires that the government healthcare entities display operating activity separately from non-operating activity. Government healthcare entities are required to report operating income.